Hello everyone. Good morning, good afternoon, and good evening to you, depending on what time zone you are tuning in from. And I'm very excited to welcome you to another promising edition of our Forex Morning Mastery. Of course, today is Wednesday, 7th of May, and of course, we are gradually heading into the second half of the week. And of course, this is an important phase where market sentiment in the market are likely going to change. And of course, remember today is the FOMC interest rate decision. And of course, the Fed chairman is going to be speaking, and everyone in the market wants to listen to what his outlook is as regards to the US economy. So it's an important day and volatility is expected. And what we are going to be doing here today is to see how we can strategically position ourselves in such a way that we can capture whatever opportunity the market presents to us today. So, buckle up your seatbelt. We have some very interesting trading setups to look at. If you're a fan of the USOILSPOT, the USDJPY, and of course the XAUUSD, you do not want to miss out on these ideas we will be deliberating on today. So we have been monitoring three financial instruments since the beginning of the week, and of course they have done pretty well. We've had some tremendous position on the USOILSPOT. We captured some very good opportunities, sell opportunities at the beginning of the week on the USDJPY, and of course we had another phenomenal move on Monday on the XAUUSD. So today we are going to be looking at how well these positions are doing, what the setup is looking like, and how we want to use it using the technical and fundamental understanding of the market to position ourselves for the next move. And before we go in, I do want to welcome newcomers in the house. You're highly welcome on board. My own name is Sharif Daramola, and I'll be your host for the next 40 minutes to an hour, depending on how sooner or later the session ends. And the Forex Morning Mastery is an educational avenue where we come here together 3 times in a week, Monday, Wednesday, and Friday, to understand the sentiment in the market and of course use this understanding to position ourselves for the next move. So I highly welcome you on board once again and encourage you to actively engage in the comment section. So with that said, here we will be diving right into the business. And of course, the first thing we normally do is to keep tabs with the US dollar market dynamic. It's important for us to understand what is going on in the US dollar and of course the economic calendar to have a deeper understanding into how market participants are thinking. And of course the US dollar is strongly correlated to all of the assets we are monitoring, which makes it much more important for us to look at before we jump right into the charts. So at this moment, all eyes remains on the Fed interest rate decision and of course the FOMC, and the US dollar stands at a crossroad as traders brace for Powell's next move before making any decision at this point. And if you look at my screen right now, we have the US dollar index, that is the DXY, which gives us a representation of the sentiment in the US dollar market dynamic. And of course, we talked about this on Monday, where we did acknowledge the fact that the trend is strongly bearish since the beginning of the year. But in the last 2 to 3 weeks, we began to notice that the structure is yet to find a lower low. And look at what we have here. Ever since price tested this level at the $98 area during the third week of April, price is yet to break through that structure. Subsequent attempts by sellers to break through failed. As you will see, price continued to find higher highs and higher lows. Now, this all higher highs and higher lows, though, doesn't really look encouraging as regards to buying expectations. But one thing we could understand from the structural detail here is the fact that price action had evolved into what is looking like a reversal pattern in the form of an inverse head and shoulder pattern, where the neckline of that pattern is this dotted line we see here. And of course, at the beginning of the week, I was saying that my instinct was telling me that the dollar is likely going to rebound this week. Of course, the US dollar is very, very cheap at this juncture, and maybe market participant could see it as cheap enough to buy at this point in time. And of course, the breakout of that neckline was a very good signal. However, since the week had begun, you'll see that the price of US dollar hasn't been really doing very well. Limited upside as the Fed is expected to keep rates steady. And this, of course, has reduced new bullish catalyst for the US dollar. Then we also saw the risk on sentiment from upcoming trade talks, which is reducing the appeal for US dollar as a safe haven asset. Now, with that said, the broader market optimism continued to cap US dollar gains. Especially, we saw what happened during the Asian session, as we saw Asian traders continue to drop the US dollar. Now, don't get me wrong, this does not mean that the dollar does not have anything, or let me say the dollar does not have a catalyst today. It is a tradition that prior to FOMC, there is always this expectations that traders will be rebalancing their position ahead of the interest rate decision, driving short-term US dollar demand, which is a very good possibility today. And of course, we are going to be looking at how this is going to play out, especially as we can see price is back into retesting that trend line. So will this be a platform that will send the price going higher, or are there any chances that sellers will come in, break down the trend line to incite a downtrend move? Now, market is looking for clues on the future interest rate cut path, boosting anticipation and support for the US dollar in the meantime. So you would agree with me that we are at a crucial juncture as regards to the US dollar market dynamic. Hence, we want to avoid premature entries. So for cautious traders, it is reasonable that we let the FOMC event and Powell's tone confirm the direction of this market. And of course, it's important that we prepare for volatility spikes. Of course, high impact move like the post FOMC especially could incite some very, very strong move today. So we need to be very careful, and as a result of this, we are going to be taking all of these factors into consideration while we review the current market dynamics around the asset we are monitoring for today. So with this said by me, I hope have been able to bring some clarity into what is going on in the US dollar market dynamic. And with this understanding, let's dive right into the charts and let's look at the assets we have been monitoring since the beginning of the week. So The first asset we are going to be taking on, of course, will be the US All Sports. And it has been a good ride since the week began right here on the US All Sport. Remember, we have been buying this asset since the beginning of the week after capturing a very simple trading setup. Of course, we had our key level at the $56 area, and of course, I made mention, despite the fact that the market is in a strong downtrend, we saw how it had become difficult for sellers to break through the $56 area. This first attempt happened during the second week of the month of April. And of course, we saw what happened at the beginning of this month. Sellers continue to find it difficult as buyers, as market participants deem the US crude oil cheap enough to buy at that point in time. And of course, this was the platform we were banking on at the beginning of the week to capture an uptrend scenario. Now, scaling down into our 1 hour time frame, we saw this beautiful setup right here. So let me zoom right into the current structure. So what we saw on Monday was this. We saw a massive engulfing bearish candle. As we saw, price started the week around the $58.20 level, dropped into the $55.50 level, and we saw what happened immediately. Price got here. We saw a sharp rejection followed by continued buy pressure, and the fact that price is finding higher lows instead of lower highs for us was a very good signal. And the key level at the $56 area, you know how we use our key levels. Of course, we want to see price break above the key level to make us feel comfortable buying that asset. And prior to the live session on Monday, I told us all that I already triggered a buy position. We all saw it in the trading panel at the bottom of our screen. And then I made mention that for those who had missed out on that opportunity, we have two options to join the uptrend move. One is if price comes back to retest the structure that was broken, which obviously never happened, to continue the uptrend move, or we wait for the breakout retest of the $58.20 level to join that uptrend move. And that was exactly what happened. We saw price breakout of the $58.20 level, and since that breakout, we've seen price move over 140 pips. And for those of you who capitalize on this one, well done to you. I was taken out of this position yesterday evening around the $58.70 area, but for those who were able to capture it all the way into the current price, well done, kudos to you. So it is high time you want to be moving your stop losses right now if you still have your sell position running, as we are at a critical juncture in this market. And in fact, that $59.50 level you see here has been a strong selling niche in the last 2 weeks, I think. Last 2 weeks, I guess. I think on the 30th of April, we've seen how this area was a selling niche. We saw it happen here. And the beginning of this month, we saw selling niche here. And then during the later part of the New York session yesterday, we saw sellers continue to negate all attempt by the buyers to break out of that structure. Now, the last couple of hours now, we've seen price continue to oscillate around that area, which further emphasize the importance of this level. Now, looking at things from a technical standpoint, I want to consider that $59.50 level has a selling niche. However, if we see price breakout retest the structure, it could trigger an uptrend scenario. Now, for us to understand what is going on here, it's important we keep tabs with the fundamentals, as we want to see what are the things that is making market participants behave the way they are behaving right now. Now, the recent at this juncture right now, as you see, crude oil has climbed to its highest level in 1 week as trade hopes, that is the trade policy thing between US, China, and the rest of the world, and supply of crude oil worries outweighs the oversupply risk and Fed uncertainty. And as a result of this, we saw we saw the price of US crude oil rise in the last 48 to 60 hours, thanks to renewed negotiation between the two largest economy, that is US and China, which obviously has lifted the sentiment and his global demand concerns around this commodity. Then, of course, the expectation of tighter US supply. We saw, was it not yesterday? I was reading Reuters where it says that the recent rig count reduction by US energy firms in response to lower prices may signal a potential future drop in production. And of course, when production drops, what happens? There is scarcity in the market, and this could tighten supply and of course make the price of oil rise. Then if we also consider the geopolitical tensions, that is the ongoing Russian-Ukraine conflict, the escalating Middle East tensions, which could keep supply disruption risk alive, further underpinning crude oil prices. So with all of this, you would agree with me that the path is looking a little bit, or let me say, tilted to the upside in the meantime. However, the OPEC Plus intention to accelerate production in June raises concerns about potential oversupply, which may be a significant factor limiting the upside trajectory at this point. So we need to be very careful. Then if the US dollar finds some strength ahead of the FOMC decision, oil can become more expensive for non-dollar buyers and capping the price of this uptrend scenario. Now, what do I mean by that? The US crude oil is a US dollar denominated asset. Now, if the dollar's value rises, then traders who hold other currencies will find the US dollar expensive to buy before they can buy the US crude oil, which reduces the demand and increase price of oil. Reduce the demand, and if demand is reduced, then there is oversupply in the market and price will certainly drop. Then we also await the US stockpile data, which could reveal unexpected builds, adding to short-term bearish pressure if supply appears looser than expected. So these are the major things that is influencing the market right now. And of course, if we want to remain bullish, we will have to trade around optimism in this particular market. And if we want to, if the sentiment goes bearish, it could be as a result of Fed strike hawkish tone, or an OPEC Plus confirmed aggressive output increase. Now, with this information we have gathered here, how do we intend to use it to navigate this market? Of course, the structure we have identified on the chart here tells us a lot about how market participants are digesting this information. First of all, since the beginning of the week, we already have a beautiful ascending trend line. As you can see, price has consistently respected this trend line since the beginning of the week. And of course, you know how we use our ascending trend lines. As long as price action remains above them, we will continue to look out for patterns and structures that support buying ideas. Now, with the way things are going right now, looking at this last candle, we might see a situation where price retraces back into the trend line, where the inability of sellers to break down the ascending trend line could incite buying ideas. So what I want to do here is wait and see how this candle is going to close. Will it retrace into this trend line? So what I'm going to do now is to place an alert on that on that trend line. So as soon as price gets there, I will receive a notification telling me that price is there. Then I want to monitor how market parts or how price action reacts to this trend line. So if I begin to notice buy pressure resume from here, or maybe let's say a double bottom structure forms or any form of reversal setup, I want to be buying the breakout of the neckline to continue the uptrend move. However, if price breaks down the trend line, then this could signal that we might be in for profit-taking activity ahead of the FOMC meeting. Now, before I can join a sell from this breakdown, I would love to see some confirmation, because obviously the breakdown of this trend line could turn out to be a false breakdown. So we want to see confirmation happen, and this obviously will reflect on the chart as price coming back to retest the trend line, and the inability of buyers to maintain momentum above the trend line will be all we need to confirm that sellers might be in for a short-term sell. So continued selling pressure below that trend line will definitely be that trigger that will incite selling ideas for us. Now, secondly, if price does not get into that structure and we see continued selling pressure like this, and price forms a double top structure or something like that, breakdown retest of the neckline would be a good opportunity to join a sell. So what I'm going to do here is to mark out a structure that will help us navigate the sell. So I'm looking at something around the $59.20 level, and I will explain to you in a moment why that is. So let's mark the structure out here. So we have the $59.20 level, and look at the structure here. It was a selling niche at some point. Look at that engulfing bearish candle from that particular area, a shooting star candle as well. And for me, I want to guess this is a selling niche. However, we saw price break out of the structure during the Asian session, found some supports that led to the breakout of the $59.50 level. Now, if price can break down the structure today, then this could be the beginning of a sell-off. So I'm looking at a breakdown retest of the structure to confirm that sellers are getting stronger, and at that point I will be willing to join a sell. All right, so I hope this is very clear. Let me repeat myself again. I'm looking out for two things here. I want to see if the market will come into this trend line, and whatever happens around this trend line will determine if we are buying. So if buy pressure resumes here, we could have a breakout retest of the neckline to buy that structure, and if it drops below, we'll look out for selling ideas here. Now, with the way things are going now, I would like to let's wait and see. I will update us accordingly on my Telegram platform as I continue to monitor price action around here. But basically, this is what I am looking at today. And if we sell, how far do we think it's going to go? Well, if we look at the memory of this particular zone since the in the last 1 to 2 weeks, you can see it has been a strong selling niche, and every time price drops from that area, we see it drop to as far as that key level at the $56 area, dovetailing to a minimum of 350 pips to catch there. So for me, I will consider that if that will happen, then I could see price drop to as far as this area. In fact, I want to risk a sell at this moment. And the reason why I want to risk a sell is basically because I'm profitable on this asset, and considering selling here, I want to risk some of the profit I've made so far this week and see if this is going to fall through. This is a very strong selling niche since the beginning of this month, and with that idea in mind, I place a sell. Then if price goes ahead to break down retest the $59.20 level, then I will be adding another sell to this trade. So let's see what happens at this point in time. I want to wish us all the best of luck on the USO spot. If you have any questions, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. Oh, I see you, Adeni Babalola. Good morning to you. It's been a long time. How are you doing? Trust you're doing very well. All right. So, in the absence of no questions, I want to assume that we are all on the same page, right? And obviously, we have marked out the structures accordingly on the chart as we have illustrated. Let's see how the market is going to play out around this area. And before the end of my analysis, I mentioned that I already placed a sell position, considering the strong selling niche within this area. I can afford to risk some of the profit I made so far this week around this area and see if it's going to work. If it doesn't work, we are good. If it works, we are perfect. So let's see how the market will play out. And of course, I will be updating us accordingly on my Telegram as I continue to monitor price action. So I wish us all the best of luck on the USO spot. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY. And we have been trading this asset for about 3 weeks now. I think we started trading it at the beginning of, I think the second week of April, due to popular demand. And in that last 3 weeks, we have done very well on this asset, week in, week out. If for those of you who are part of this trend, you will testify to this. And since this new week began, we can see that the Japanese yen had continued to gain momentum thanks to the expectations around the Bank of Japan's rate hike. Despite that recent dovish hold from last week, the Bank of Japan reaffirmed commitment to further rate hike, which helps to cushion that JPY loss we saw during the later part of last week. And this resulted into continued selling pressure, as you will see on this chart. This was the structure we marked out at the beginning of the week. We captured that strong selling niche that started the week, and this gave us this range bound structure we marked out, where we saw price confined between the 145.00 and the 144.00 area. And I can remember on Monday telling us that whatever happens between the 144.375 and the 144 area will be playing a significant role for the first half of this week. And what we were looking at here was to buy the breakout of the 144.375, which obviously never happened, and then sell the breakdown retest of the 144.00 area. So we were able to sell that one. I had two sell positions initially, one at the 144.00 level, just as we had discussed. Then I added another one at the breakdown of the 144.735. Now, you know how we manage multiple entries in this community. So as soon as the second sell position triggered, I moved the stop loss on the first sell position to break even. So we were taken out of the first sell position, and the second sell position moved, I think about 200 pips. Over 130 pips before the buy pressure resumed yesterday. And as a result, we were able to take some small size of profit, which is still okay, making us putting us on the positive side of our portfolio. Now, with this uncertainty around the Fed and the Fed likely to pause interest rate, traders at this moment are very cautious, which obviously had limited that downtrend scenario on the JPY. And of course, like I did say earlier, the time prior to the release of the FOMC usually see reposition in the market that favors the US dollar, and it appears the dollar is looking like going into a recovery in the last 12 to 15 hours. As you can see here, price appeared to have broken out of that descending trend line we marked out here at the beginning of the week. So with this situation here, the question now is, will this momentum continue to the upside, or will this be just a false breakout? Now, with all factors supporting the Japanese yen prior to this current moment, the Japanese yen right now is weakening because investors feel more confident about global trade now due to the renewed discussion between the US and China. But it's not feeling too much because Japan might raise interest rates and there are still global tension in play right now. So you can see it's a crucial juncture where we do not want to be too aggressive. In fact, if I take a position, if I take a buy here, I'm not going to be having multiple buy entry. Now, how do we intend to trade the USDJPY? So if what we are going to be doing now is to scale down into the 15 minutes time frame. In fact, I have a range bound structure which had helped me to have my first buy this morning. Okay, is it? It has triggered, isn't it? Yes, we have a buy triggered. If you look at the bottom of your screen, you will see it. So this is as a result of what I found here on the 15 minutes time frame. So look at the 15 minutes time frame here. So this is that descending trend line we spotted at the beginning of the week, right? Excuse me. So since the beginning of the week, we have seen our price had consistently respected that trend line, pushing price to the downside. Excuse me. And right now, the last 10 to 12 hours, we saw price go through a consolidation phase. Excuse me. So we saw price confined within the 143.300 and the 142.850 in the last 10 to 12 hours, emphasizing the prevailing uncertainty at this point in time. And you know how we use our range bound structures in this community. As long as price remains range bound, we know that there is a tussle going on. There is a tug of war between buyers and sellers, and we want to wait for the winner of that tussle before we jump into that trade. And the winner will always come in the form of either price breaking out the resistance line to give us an opportunity to buy, or a breakdown of the support line to give us an opportunity to sell. And look at what is happening here. Price had already broken out of this descending trend line we marked out earlier, which is a very good signal. Now, our concern here is to know whether this breakout is a true breakout or a false breakout. Of course, you know, the yen is strong at this point. So with that said, we have a buy position triggered, but mind you, there is a possibility that price could retrace back into the trend line, retest it to continue that uptrend move. So what does this tell us? It tells us that we need to have a wide range of stop loss. We want to give enough breathing space for price action to move around. So stop losses on this buy will be somewhere below that descending trend line. That's dovetailing to between 30 to 35 pips of stop loss, giving enough space for price action to move around. So I will move my stop loss on that buy position now to a comfortable area below that descending trend line to capture any form of retracement that might likely happen as a result of this technical structure. So at this moment, we have a buy trigger. Hopefully it continues to the upside. Now, if price moves significantly, well, please ensure you move your stop losses, secure the current buy position, as we could see a sharp decline anytime. So it's not cast in stone yet. Let's see how this plays out, and of course I will be updating us accordingly. Now, in order to consider selling at this point, that is if we at any point in time get taken out of this sell position, this buy position, for us to sell, we would rather want to see price take out the support line of that range bound structure, which of course will have brought price back below that descending trend line, making us feel comfortable with a sell. So that is the only condition that will make me sell the USDJPY today. Then another support line is here at the 142.360. Let me use a 142.350 level, which obviously, if price can break down, retest that structure, it will welcome more selling ideas. So this is basically what we are going to be using to navigate this market today. We have a range bound structure. We have a descending trend line which has been broken to the upside, signaling the potentials buyers have at this point, and this has led to us buying the USDJPY at this point in time. Of course, stop losses remain below that descending trend line, giving enough room for price action to move around, and we shall continue to monitor what price is going to tell us to do in the next couple of hours. And of course, we are not considering selling unless we see a breakdown retest of the 142.850. So it's a simple trading setup. Let's see how this is going to play out, and I do encourage us to mark out the structures accordingly on our chart. So there you have it. If you have any questions, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned. Oh, I just saw your comment now, Joe Akim. Good morning to you, and thank you very much for the observation. You are quite right. That was a typographical error. I was trying to move my stop loss to break even after that price got triggered, but it appears price is back into that particular area. So I don't think it's necessary. Okay, let me see what I can do. Price is back into that structure. I don't know what that structure is saying right now. I don't know what it's looking like. I think let me just readjust it. Okay, thank you very much, Joe Akim. I'll readjust it. All right. So I guess we are all on the same page, right? Buy position triggered on the USDJPY. Let's be hopeful that the momentum will continue, at least for us to move stop losses and secure position so that we don't open ourselves to any risk on this trade. So once again, thank you, Joachim, for that observation. All right, so in the absence of no questions, let's move on to the final asset on our watch list. Stay tuned in. So the final asset we are looking at this morning is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, this asset alone gave me over $150 from this portfolio you are looking at. And it was quite a massive move on Monday. We captured that move right on spot at the break of that 3,260 level, but unfortunately I wasn't able to maximize the whole bullish move as my TP was just right here at the 3,360, and we saw that level hit during the Asian session on Tuesday, and since then price had continued to climb higher. And of course, you know, I don't trade on Tuesdays, though I updated us yesterday morning before I left my workstation. And at that time, price was trading around the 3,380. And I did mention in my commentary that we want to see how price reacts to that structure, that a breakout retest could trigger some buying ideas, and selling pressure below this level could trigger a downtrend scenario. And of course, we saw when I came back yesterday, I saw this old move, and some of us might have taken it. That's over how many pips that was? That was over 550 pip move. Wow, that's massive. And for those who took it, well done, kudos to you. I did not take it, I was not around, came back to see what is going on in this market. Now, currently, gold price remain around that 3,380. It's back into that 3,380 I talked about yesterday morning. And for those of you who are following me on both my TradingView and Telegram platform, you must have seen this current setup as I did share it this morning, as this is going to be helping us navigate this market today. Now, bulls, the buyers, or let me say the market participants in general, are waiting on the Fed interest rate decisions amidst this geopolitical tension and trade uncertainty, which has clouded the global sentiment at this point. And this is evident as you will see in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours. Price action had remained confined within the 3,400 and the 3,370 to further emphasize the prevailing uncertainty at this point in time. We are looking forward to the FOMC, and investors are in a wait and see mode. ahead of this interest rate decision. If the Fed leans dovish or signals delay rate cuts, gold could get a bullish boost. And of course, the US dollar is weak at this point in time, struggling for direction as the market continues to consolidate, which naturally helps gold prices stay supported, at least in the meantime, around the 3,380. So for me, I still want to maintain a bullish bias, even though we are seeing signs of selling pressure. And for me, this whole area I highlight in red is still considered to be a demand zone, except if we see strong bearish move like a breakdown retest of structure. And another factor here that continues to support the gold commodity is Trump's announcement of 100% tariffs on foreign movies. So all these Desi movies, Chinese movies coming into the United States will be are already tariffed now with 100%. And potential new tariffs are also expected on pharmaceuticals, which could increase economic uncertainty. And obviously, you know what that means. It will continue to support the price of gold. Then we also have the ongoing conflict in Ukraine, Gaza, and the military standoff between India and Pakistan, which of course will continue to boost the narrative around a gold uptrend scenario. Now, in as much as this is the case, it's important that we don't want to get caught up in the whole narrative that gold has no other choice than to rise. Well, the sentiment is very positive in favor of gold, but as you all know me, I don't like to be too carried away. I always like to be objective and ensure that we keep tabs with the potentials that both sellers and buyers have so that we can have a ready mindset to capture whatever opportunity the market brings. Now, if we look at the US-China trade talk, there is some positivity around it. We have scheduled meetings between the US and China officials in Switzerland, and this suggests possible easing of trade tension, which could reduce safe haven demand for gold commodity, at least in the short term. Then we also have the market sentiment, which has turned slightly risk on due to trade optimism, which is not ideal for the price of gold. Now, at this juncture, especially ahead of the Fed interest rate decision, buyers may be very, very hesitant, and this could result into FOMO, where market participants start taking some profit off the chart. So with that said here, we cannot say buy is already cast in stone. So we need to be very careful around the structure and see what to do and how to go about the situation. So for long-term traders, for those who intend to hold on to a position for an extended period of time, we would want to wait for the Fed to come out. So we don't want to rush in. The Fed's tone today will set the next wave, where a dovish Fed could push gold above the 3,380, while a hawkish one could cause a sharp pullback to the downside. So we want to watch out for the headlines out of the Middle East as well, and sudden tariff updates from Trump. They could cause knee-jerk bullish reaction in the gold commodity. So how do we trade this? I believe that at this point, we want to exercise some patience. Now, look at the structure here. I think we have something here. We have a support line here at the 3,360. Let me just put it right on there, 3,360. Right? We have a support line there, and I would like to see if price can break down that support line. I will jump into a sell. At least in the meantime, let's risk something there. Let's risk some of the profit we had made so far this week. But if you are yet to trade the gold and you are yet to make profit, I guess you just have to wait for a retest of structure for confirmation's sake before jumping into a sell. But if you're profitable already, you can just risk a minute size of minute percentage size of your portfolio, and let's see if the breakdown retest of the 3,360 will happen. Now for the 3,380, currently this candle still has about 32 minutes to go, so we want to exercise patience here and see if we can see something like a breakdown retest of structure. Then we can join a sell. Then with a sell stop order below the 3,360, then we will be willing to join a downtrend move. Now I would like us to look at what things are looking like on the 15 minutes time frame to have a closer look into the current narrative. So 15 minutes time frame here on board, and then we have the 3,360, right? Where is it? 3,360. I want this to be well acknowledged. So we have the 3,360. Then I think this level here, this is the 3,380, right? This 3,380 for me, I want to believe that if price can climb back above the 3,380, we could be in for an uptrend move. So I will place a buy stop order above that structure again. My first buy position has already closed at break even on the gold commodity, so I will place another buy stop order again. I think this 3,380 could push price higher, so let's see what happens here. Then we also have another level here around the 3,400, I think, or 3,380. Okay, 3,395. So I'm taking 3,395. That's the resistant line of the 395. That's the resistant line of the range bound we see here around that 3,380. So we want to be adding more buy if price can break above this particular structure. So we're selling a retest of the 3,380 and then had more sell at the breakdown of the 3,360. So what I'm saying here is this: if price comes back, continue selling pressure below the structure, and if doing within this old retest of structure thing, our buy position gets triggered and selling pressure persists, we will close the buy position and then trigger a sell. Then we had another one at the breakdown of the 3,360. So this is what we are looking at to help us navigate this market today. We have price still trading above the ascending trend line we spotted on the 1 hour time frame. Let me show you again so you can see. So we have price currently oscillating around that ascending trend line, which we still look at it here. This trend line has played a significant role since the beginning of this week, and look at how it continues to support price. So we could see price continue that move up. So that is basically what I'm looking at on the XAUUSD today, and trust me, I will be with you on both my TradingView and Telegram platform to give us updates as I continue to monitor price action around this area. I strongly stay to the upside, but we could see some short-term sell if profit-taking activities happen before the FOMC today. And please don't forget to give the video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. Why not support the channel by giving the video a thumbs up? Your thumbs up goes a long way in helping the algorithm to push the video to a wider audience of traders who may find the content beneficial, and at the same time it also inspires me to continue to do more of this. So thank you very much, guys. For those who already clicked on the like button, I really appreciate your support. So let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. All right. So in the absence of no questions, I guess we are on the same page. Please click on that like button. Please, we are yet to, let's make the number of likes tally with the number of people on board. We have over 9 people on board at the moment, and we just have 3 likes. Please, let's make it tally. All right. Thank you very much. So it's on this note we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. Adini Babalola, Joaquim, and those of us who are online and did not make any comments. It's great to have some time with you guys today. So today we were able to run the XAUUSD, the USOILSPOT, and of course the USDJPY. So far this week we've done pretty well, and hopefully we will be able to build on this momentum towards the end of the week. In fact, this week alone we've been able to boost our account from the 1,380 thereabout to 1,530 something, which is quite impressive. This is the first time we have this massive move so far this year since we have been trading this particular account. So hopefully we can build up more before the end of the week, and I'm very, very positive in that regard. So I hope we all marked out the structures accordingly as we have illustrated. If you have done so, well done, kudos to you. So all we just need to do right now is exercise patience and allow the structures to mature. And for those of us who are joining for the first time, I do hope you are able to gain 1 or 2 things from our discussions. If you did, of course, you want to be part of our subsequent editions. The next one is on Friday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done and, of course, prepare for the last trading day of the week. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. And of course, I will be updating us. FOMC is about 7:30 p.m. Local time, so I will definitely be giving us some setups before that time. So I wish you all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.